Hello and welcome to the 150th episode of Leaders in Cleantech podcast. And I'm delighted to be joined by Jan Lozek, who's the managing director and founder of Future Energy Ventures. Jan, great to have you with us.
Hi, David. Nice to be here. Thanks for having me. Looking really forward to our discussion in this exciting times.
Yeah, what a time to be alive, right? So, yeah, so we'll certainly cover some of the issues going on with tariffs and all at the moment, because it's clearly going to have and is already having an impact in the clean tech ecosystem globally in Europe as well. Depending on when people are listening to this, who knows what the tariff regime will be? It was different yesterday than today, and tomorrow might be different again. So, which is one of the big issues, of course. But anyway, let's start with a little bit of a backstory for yourself, Jan, and for the fund. You've obviously got a bit of a global reach, but it'd be interesting to hear a little bit about maybe what led you to start the fund, and also then where you are now in terms of the types of things you invest in, what your investment thesis is.
Yeah, yeah, Happy to start. The question is always how to start, where it started. No, I strongly believe it started already in the 80s.
Mm-hmm.
And maybe you remember, David, in the 80s, what happened in Europe was we had a couple of climate disasters. No, we had dying woods. We had a lot of industrial companies interfering with the ecology system here in Europe, and we and I were believing we need to do something, no? And this direction, in direction of that, it was also in Germany the time of formation of the Green Party,
Right.
where ecology were becoming a more even a stronger voice in the society in Europe, and in particular in Germany, where I was growing up. I was raised and born in Berlin. And then this feeling and this notion about of ecology is important. I started to study economics. I always wanted to invest, to do business. That was my passion. And this feeling, this gut feeling remained. We need to do something, and how to use my skills and experience and doing something. Then for my first time after university was the new tech market. I was
Right.
was excited about what happened with all this new technology giants forming. And that time it was were small companies like Apple, Google, and so on and so forth. And then my next step was into the energy sector, into the in the early 2000s.
Okay.
And since then, I was involved in projects changing the energy system. No? It was first the deregulation, then it was the growing renewable plan, so to say, and then the implementation of renewable systems in all places in Europe, North America. I was in particular responsible for investments into renewable energies,
Mm-hmm.
industrial sites, into projects all over the world, and then in formulating investment strategies about how to change and convert conventional asset parks or generation fleets into more renewable fleets.
Right.
Um, and and I already started to really try to create on from my side the impact. And then in 2016 there was the opportunity to set up a fund, a venture capital fund, into the new business opportunities arising from the energy transition. And I took that opportunity to set up a 300 million euros an investment fund.
Right.
Sponsored by RWE in that time, to go out into the markets, North America, Europe, and Israel, and to scout and invest into the best solutions which could help to accelerate the energy transition. And that was the start of Future Energy Ventures in 2016.
Okay.
And this first fund, we've created our first or our current thesis about the decentralized energy system, which is converging um, um, with the city infrastructures,
Mm-hmm.
hugely in future. So with buildings, with electric vehicles, with the electrical transportation system. And then we invested into 50 exciting companies in the space. We were quite successful. With that, we've created one of Europe's largest climate tech investors in that time. And today the fund is flourishing. We already exited a couple of companies. We're managing the remaining portfolio. It will take us until 2028.
Okay.
And then And then we are busy with other funds, so to say. And just naming a few companies here, Kukulos, they're doing software technologies around the metering. Termondo, they are helping to roll out heat pumps and solar systems, and then to manage them with software here in Germany. Wörth is a company which is really active in the EV charging management space. So there are a couple of really good investments we did in that time with the first fund, which led to the fact, let's do the next fund. And we launched and then raised the second fund in 2023. It's currently active. That's the fund we invest from into really exciting companies. And the change was the first fund was inspired by RWE, and the second fund was a capital market based fund, because the market is growing so strong that it was the only possibility to stay as a leader in the market and to be on the forefront of this change. We decided to move out from RWE, or then E.ON. There was a large merger in between, and set up our second fund. And outside with many investors, with E.ON as one of the larger anchor investors, with the European Investment Fund, with ABN AMRO, with a couple of strategic players. So we're really excited with the second fund, which we currently use to invest into the same thesis, into Series A and B stage companies. We invest between 1 and 10 million, depends if we are early Series A or late Series B stage. We look for companies in that areas I've mentioned before, which already have a technology which is the product is proven in the market, and we can help here to scale. And we mostly focus on software and digital tools in the energy transition. We are not an investor in deep hard tech place. However, we invest into companies which are using proven hardware or bankable hardware systems to scale that, like Termondo. And here we are.
Yeah. Well, it's quite a journey. I do recall, again, old enough to remember back in the 80s, the acid rain was one of the big topics on the ozone. But more recently, of course, actually, it was the Energiewende in Germany which inspired me to join the sector in 2007, starting a solar business in the UK. So again, Germany took a lot of lead, I should say, both politically with the Green Party and, of course, with the Energiewende. But yeah, and that's a whistle-top story of a very long and challenging period of time for Cleantech investing. Obviously, lots of highs and lows in the ecosystem. There've been some great, I should say, successes in your portfolio. I think Termondo, I think, is very well known as obviously as one that is scaled quite significantly. When you look at the present ecosystem, what are the factors which now drive your deal flow? Are there either different places or different types of thinking behind the companies that you would invest in now than maybe you did 10 years ago?
Yeah, and the market has changed hugely, and just recognizing the fact that we now have about 200 to 300 billion euros of committed venture capital available globally. If you look at just all the climate funds and our climate fund peers in the market. So I would say there is something which have changed, and happy to mention that in a minute. But generally, we do what we always did. So we are thesis-driven investors. So we really have an understanding, or we have our thesis about things which are important and how they are developing. And then we make our bets in that thesis. And currently hot topics for us, for example, are topics like flexibility management as such. So how to manage demand and supply in a fully renewable energy system. What we see here in Europe already each day as a challenge happening. And we are investing here into companies which can solve and help and contribute to solve that problem for Europe and other continents. And we see that not only as an European problem, also as a global problem. And based on, but going back to your question, so we are looking into thesis, we are looking then into exciting companies in the space. We try to connect, we try to follow, and then invest when it's possible. And then through our network, and that's today obviously has changed through our strong network We get a lot of also companies recommended. We should look into, and we obviously have a strong brand and get a lot of inbound.
Yeah.
But our focus is always looking at coming from our thesis. Does it fit? Does it make sense? Is it a good team? And so on and so forth. So I would say the general way we are doing is the same, but it's just much more, no? And if we start in 2016, we looked at 500 a year. Now we look at 2,000 a year. So just the size has grown. And then the other topic is competition, no?
Yeah.
I think in 2016, the question was how to syndicate a deal. So how to find other investors which come with you along on a cap table to make it an attractive venture deal for the future. And today there's competition. There's much more funds with different strategies, and that means also for us as a team to be competitive, so be early, to be early connected to startups, to know what's happening, so that we can react quickly. Because people like us, we always need a little bit more time in order to make up our mind. No, we really wanted to understand in what we would like to invest. So it's also something for us, but has mainly changed is a bit more being quicker, more efficient, trying to be more proactive. So really looking longer ahead. So what would be the deals in the next 12 months?
Yeah.
Would be the deals in the next 24 months, and then also then being going out to the market, connecting with the venture capital partners, so to say, or friends, and being open for syndicates, and trying also to anchor that quite early,
Yeah.
than later.
Yeah. It's interesting, actually. Obviously, when we had the post-COVID bounce, there was 2 or 3 years of really solid growth in the Cleantech investment system. We worked with many companies who had received a good A or B round and needed to scale. I guess because I work with both the VC community and also directly with the founders and startups. One of the things that's been strange in the last 6 months was that a lot of the VCs I'm speaking to, like you were saying, is very competitive to get deals. There's a lot of competition for investment. But on the flip side, certainly since the back end of 2024, a lot of startups are saying nobody's investing. There's no money out there. It obviously did change. Just the statistics that the investment was lower during the back end of 2024, but that seems a bit of on one hand, there's investors saying the competition is great. We're not struggling, but it's intense to get deals. It's more competition for deals, but also then the startup saying nobody's investing at the moment. How do you see it from your perspective? Is the flow of money any different? Are you investing either more slowly or more deliberately than perhaps you did 6-9 months ago?
Yeah, it's a good question. So I would like to go back to one point you've made. No, you said after COVID, it felt like that after COVID there was a lot of release, and things were picking up, and we get traction. No, and after COVID, then we have seen 30-40 billion US dollars of investment capital in the market, and then we grew until 2021 to 70-80 billion, and then we went a little bit back to the 40-ish, 50 billion euros, US dollars of capital spent just in venture capital. No,
Yeah.
not talking about the energy transition. If you look in the entire energy transition, we went from 1 trillion to 3 trillion, no, in the same time. So we have seen immense growth in the sector. And I think the main driver of the market right now is the energy transition on the hardware side. So as more renewable energy we see in the market, customers buying photovoltaics, electric vehicles, and so on and so forth, as more as the market is growing, because that creates much more opportunity, and that creates then also the capital for investing into companies. And we have seen, I would say, demand shift in the recent months because of different situations, which then led to less growth. For example, the U.S. elections, or let's say geopolitical instability was a driver in both directions. No, the war in the Ukraine, and there was definitely something to really think on, to push forward the energy transition. Political instabilities in a couple of European countries, in the US, that created a little bit headwind
Yeah.
with regard to the energy transition. So we have seen both. However, the mega trend, underlying trend, is we see more and more renewable systems globally deployed. And if we see that, we need new technologies in order to organize and to manage. And that will remain, and it remains, and that's a strong trend for all the startups. And it's one point, and which creates then this demand shifts here to here. But generally, I think the trend is the same, and that created this friction maybe, or this not matching demand and supply. And then on the other side, I think this COVID was for many of us also kind of a reflection point, isn't it? Being so much so much time at home
Yeah.
and thinking about what is it, my life, the life in general, what's the thing I wanted to push forward. And we have seen, especially in the younger generation, which maybe lost a couple of months or years of really important experience we've made, David, in life, maybe there was much stronger push for pushing the right things forward, no? And clean tech is one of the top things on mind of younger people right now, and that also created to a huge a creation of new ideas and new innovations and new startups, and maybe there was too much supply and too less capital demand, and that is not always matching in time. But in general, I would say there is a lot of capital for really good ideas.
Yeah, it's interesting. We just did our quarterly report, which went out, and the headline was that the tailwinds are really, really strong still. But at the moment, of course, the headwinds are also quite strong, and it's trying to recognize that is a a short term situation. We don't know exactly how it will play in terms of, particularly with the US, we can touch on with Trump, but yeah, sometimes I think there's a lack of patience for people generally in society these days, and the fact that I always remember I did a podcast with Yuri Levine, who is the founder of two unicorns, who said that fundraising is a journey of 1,000 no's, and yeah, I think sometimes younger, without sounding toward myself, younger founders maybe expect things will happen much more quickly, but the it's a tough business to start and found and raise for a business for a startup. And maybe there's an element of when the headwinds are stronger, things just do take a little bit longer to get done.
Yeah, yeah, and you're right. And if you start, you need to start to learn, and you need to learn quickly. That's the main rule in the market. And if the market is over excited or over accelerated, then you should take as much money on board you can for the times when the market is not, or if the market is like now, you need to focus. Profitability and cash flow is key. No, if
Yeah.
you don't have a clear horizon right now as a startup, how you make your business as quickly as possible profitable, and so a bottom line is much more important than is also important, and not as important, and is also important, and top line is not the only criteria for investing right now, and you need to recognize that as a founder, no?
Yeah, there was an element, I think, where there's a little bit of a land grab for particularly in, I think, electromobility, where maybe the business models were, not so dependent, or perhaps there's not so much a focus on profitability and traction. But things change, of course. But there's lots I want to ask around how you come to your investment decisions, which maybe again help founders or people who are potentially fundraising who listen in. But we've touched already a little bit on the tariffs and Trump, and I think it's an important factor at the moment in terms of how that will affect the ecosystem, of course, in Europe, but globally. It's complex, of course, because it changes every day. But how do you see the impacts in, let's just say, for the remainder of this year, potentially, in terms of how, the clean tech ecosystem will be affected by those decisions that are constantly being made?
Yeah, yeah. It's really difficult to predict, because he is such an erratic person. No, today I'm going left, and tomorrow right, and it's just unpredictable. No, maybe it's, you should always do the opposite. Think the opposite. You would think, then maybe you're a better predictor of Trump. And it's difficult to say, and I think that's the first thing you need really to count in, that things can quickly change, and you need to be able to quickly react with your business,
Yeah.
and you need to prove that to investors. I think that's important for founders and for companies to acknowledge. So we need to be just much more agile than we have been, and also on the investor side. No, I mean, we were discussing on Monday, we were discussing just to lay a term sheet into a company. No,
Okay.
obviously I can't mention the name, but the topic was really quite a high price. Should we do it? What does the transaction mean in the current environment? And then our final take was the long-term trend remains. However, we should be more modest on the pricing side and not going all in, no? And being a bit more modest on our pricing strategy here for that opportunity, no? And that's obviously what we do in our decision making right now, that we try really to estimate what does it really mean. And what for us, what we see there is, in general, what you can say is there is no predictability for the US American climate tech market right now. No, you have
Yeah.
a couple of instruments in place. You will see what's happening. If the companies can rely on the IRR procedures and rules and so on and so forth. But it's really difficult to see and predict, and it's a kind of a market which is more risky to invest. So you need to have a greater and better opportunities with higher potential and a better and a safer backup, so to say. What you can predict, and what is quite strong right now, and I think that's a tremendous opportunity for Europe. And I was saying that over the last 12 months to everyone in our podcast conversations. Europe, that's our opportunity for standing in. That's our opportunity for creating and focusing on stronger partnerships with Asia, for example. No, that's our opportunity to really push the climate transition or the energy transition forward. So, because in Europe we have a strong push of the European Union for the energy transition, there's
Yeah.
even more support than less support. If you look at Germany, we have a strong support of the current new government of the energy transition. There is even more support. There's even more capital available for solving these two big problems. How to decarbonize buildings, mainly talking here about heating,
Yeah.
isn't it? And then how to electrify the transportation systems and getting decarbonized that systems as well. And there's also more money and more support here. So in Europe, we have a strong playground right now. It's set up. So here we can grow and manage. I think we should put less hope on the US American markets with regard to exits from Europe to the
Yeah.
US, or with the support. But only Europe is a great market, and we will see more unicorns here. Hopefully, and maybe that's a question for the capital markets. No, the European capital markets find this strong, even also a strong commitment, so to say, to support the European ecosystem. And that's something we have in. That's a huge opportunity for us, and with that we can lead, because that technology we develop here will be technology which will be deployed globally.
Yeah. Yeah.
So I see here, especially here, a great opportunity, and the other great opportunity is a better relationship to Asia and to China would help us all, also in Europe, with the energy transition. If you see how the Chinese people manufacture renewable goods like cars, charging systems, solar panels, if we would team up and remain or even improve our relationship, that would be an amazing opportunity for us, because China is on the other side under pressure on the North America side, and that
Yeah.
gives us some leverage for a good partnership on eye level. So that's the second great opportunity I see. And then just I mentioned already, the US American market is unpredictable. That's definitely a weakness for all of us and for the technologies developed. And the other topic is European friends, the US Americans will come and try to eat our lunch. So the competition will grow, and we need just to be prepared.
Yeah. No, I thought that again. The two aspects, which can be to our advantage. The former, of course, with the realization, I guess, that national security, European security, is energy security. They're very closely linked, of course. And I should say the consistent support from the EU and from within Europe for the transition, which gives, as we know, certainty is always a good thing for business and for investors. But I did wonder about your thoughts on whether and how much money would come from the US to Europe, because there is more stability here than there is in their home markets for the foreseeable future. And again, whether that's a good or a bad thing, is good to have the money here. But like you say, it's if they're coming just to eat our lunch and to make a buck, then that's maybe not such a positive thing.
Oh, yeah, maybe was a bit relaxed conversation, was a bit relaxed wording, but generally, I believe if American funds come to Europe and spend their capital commitments here in Europe, that's a great opportunity for Europe, because we can do more here. That also means higher exit valuations for companies in a later stage. If you think it through, that will promote the European climate technology market on all stages, especially later stages. We have a couple of topics we couldn't solve in the recent decades, so to say, financing in Series C, D, and so on and so forth. And with more experienced investors in that stages, and with more capital pockets available, that's a great opportunity for us. Coming over, I was more focusing my point on the VC like for like comparison, and then of course we have to compare and to compete with the US American investors in our asset classes. And if you look at least at the best funds in the climate tech space, they're coming from the US, not from Europe, so it's stronger competition. And that was a little bit the point I was reflecting on. If you look, I think if you look at the Climate 50 index, which is done by Contrarian, and 2150 in Deal, and thanks for doing that to the guys. If you look at the number, last year we have been number 1 in Europe, but we have been number 8 in the world. So there's 7 other funds before. And if you look then into the structure, most promising and strongest teams then in the US, and we are a little bit behind because of capital allocation, quality of capital markets. But that's then also the opportunity for us, the European funds, to get a stronger profile in the market when Europe is the stronger market.
Yeah. No, then it certainly appears that way, and which is great. I say for us who do primary work within the European ecosystem. I think that actually, even though there are some headwinds, I think the tailwinds are increasingly strong. One thing I did want to touch with you is, you say you've probably gone from now. I think you mentioned from 500 to maybe 2,000 deals or potential deals across your desk. We've touched a little bit on the sort of the thesis. So aside from the thesis, what is it that helps you make a decision to invest and not? What are some of the criteria that you use? Assuming that everybody meets your basic thesis, what are the I guess other criteria which make you favor an investment or a founding team versus some which were rejected?
Yeah, part of our thesis work is then we look into markets, business opportunities, business models, and so on and so forth. And then apart from this thesis criteria, I would say the most important point is people, the team. No, we look quite extensively in the team. So we have Fanny Rohr. She's our responsible person for that. She's doing all the people due diligence. She's a psychologist by education. So that's quite an important point. We wanted to see a team which is capable to make it, no? Through the roof. And here diversity is king, experience, backgrounds. You mentioned the topic seasoned founders, for example. That's a topic you look here into, no? But then there are also different educational backgrounds and experience and the climate or energy transition is always a bit more complex than classical VC. So you need also to have some more background in the industry, for example,
Yeah.
or understanding about the infrastructure and how does it work, or how the legacy technology is set up and how we can connect to make it better. That type of things. So people, technology. We have in our team have a chief technologist, which is leading this efforts.
Right.
And then our top, we're in an impact fund, so we're looking at the impact models. So we try to understand how scalable is the technology on the impact side. Can we achieve significant impact in the next 5 years and on a longer time? And then ESG, we have a precise look into the ESG, would say, status quo of a startup we invest into, and then we would like to then always to help to align on targets. No, we would love to see more diversity. The topic which was raised in the last couple of weeks for obvious reasons. Female founders is a topic. No, so looking then really and also into this kind of aspects.
Yeah. It is a challenge. I mean, we work with a lot of obviously both VCs and clients who genuinely want to see diversity because they understand the benefits. But it's also, I think, often misunderstood in terms of some things are obvious gender diversity, which is clearly out of balance and needs a lot of work still, but it's quite straightforward. And even to a degree, ethnic diversity is relatively straightforward in terms of it's quite visual to see that. But I think you touched on something that I'd like to explore further: diversity of thought, diversity of background, socioeconomic background, diversity of experiences from different career sectors. All of these things, I think, are important in the makeup of a strong team. It'd be interesting to hear your thoughts on, some of those things you look at beyond the more obvious forms of diversity.
Yeah. So you mentioned all in the very end. Now we are looking at the backgrounds for, and just talking about my team. No, we have people with computer science background. We have people with with engineering background. We have people with political science. We have psychologists on board. We have, like me, economists. And so we have a lot of different educational backgrounds, and then with nationalities, if you count also double nationalities, we have more than 10 nationalities in our team, and backgrounds and experience living abroad and in other countries. So we are definitely European or kind of a really international organization, which I believe it's really important if you wanted to international global impact with your team. So we look at this kind of aspects. No, you have also mentioned, so that the team is best equipped to master the challenge.
On that same theme, leadership is really difficult for founders, I think, because again, quite often there is just the founding team, whether that's solo or the founding team, typically 2 or 3 people maybe. And if you do get the funding and you do get traction and you have a good idea, suddenly that becomes 10 people, 100 people, 200 people, and those are all very different stages of the business on every level. Of course, the actual fundamentals of running the business operationally change significantly, but from a people perspective and a leadership perspective, that's quite different to manage a bunch of people around a table to managing the people in different locations and offices. Are there things that you see or think in a founding team that give you some belief that they can make that transition?
Yeah, so we try to see and understand the person or the people or the leadership team we invest into. We do a lot of conversations and our review and our and our analysis about this fact, but you never can. It's difficult to predict. No, that's what I would say in the very end. And just remember a recent conversation we had. No, what's the silver bullet really to see and understand who can make it and who can't make it. There are a couple of data you can use, but it's quite difficult to get this. So what we really try in order to get a better understanding about this, creating a relationship as early as possible, even before the investment. So as long as you know the person before, as better you can, better you can judge about that. And that's really key, that we try to get as early as possible in contact, and then also having not only one-to-one conversations, on multiple conversations between different people, and so that we have different information points insights. And then there's an important aspect, and I also remember that from our conversations in the past, is with regard to people and more generally speaking about the investment process, how to debias your investment process. No, that's a
Yeah.
challenge, no? For us all, because usually if you see this founder with this genius idea and this amazing track record in the last 12 months, you believe that this person is a rainmaker. You easily feel like you are easily biased, no,
Yeah.
or this confirmation bias. So if he he can do everything. So like or she. No, sorry, I was could be also a she, no, or um, and that's that's also an important topic, how to debias yourself
Yeah.
in that processes, and that you stay as most as possible on data, on facts, and as less as possible on emotions. And you need to have a good gut feeling and a good feeling about the deal. Don't get me wrong, but I think looking more at data and not being biased, because we are all biased, and trying to switch that off as
Yeah.
much as possible, is quite helpful to do the right decision.
Yeah, it is, and it's, as you say, it's tricky, and it's something we will continue to talk on. Just jumping back a little bit to that point of the amount of work and effort that goes into understanding your founders before potentially an investment. That's, as you say, getting to know them before they're looking to raise, getting to have those relationships, which is really interesting actually, because again, sometimes there's a perception it's all about the deck. If your deck is perfect, then you'll get the investment, and I think the deck is not unimportant, but certainly less important than a lot of people give it credit for. So it's interesting how hard a work it is for you and your VC colleagues to see so many deals, to clearly make informed financial, sound economic and investor decisions, but also have this sideline or equally important side thing of really getting to know people. So it's quite a tricky job to be an investor, I think, much more than people think. It's just check off some slide decks and pick the best ones.
Yeah, yeah, yeah.
It'd be
It's
nice if that happened, right?
yeah, and we are not perfect. So and we have a little bit also every type of personality in our team. No, some people are more introverted, and some people are more outgoing. But definitely, if you wanted to be an investment manager, you need to have this kind of, I would like to meet people and understand how they think. In one hand, and on the other hand, you need to have this this type of being diligent in your DNA. So I really want to understand this to the core or to the essence, this business model, this company, this person. But that's I think that are the key components you need to have as an investment manager. Um, Being open for new things, meeting people, and seeing and understanding, and then but also being able to prove
Yeah.
and getting into the detail.
I think that curiosity thing makes, for me at least, is a sign of any good leader, to be curious, to always want to learn. I say, whether it's on the technology, whether it's on the policy, or whether it's on the people that you're working with, it's that curiosity to always want to get a deeper understanding and a deeper connection.
And then just one last, maybe it's experience. My experience is, if you talk about new stuff or new things or innovations, most of the people would name first technology. And that's true, because that's the thing we see when we talk about innovation. But the more important thing is the underlying about technology. It's the people which create the technology, and technology, deploying new technology. Just 2 minutes more. No, deploying new technology is change. No, it's change management. You need to convince other
Yeah.
people to take this technology, put it in, and then to use it. And there are arguments for, but in general, it's a people management process.
Mm.
And change is done by people through people. No, and if you're not counting, if you're undervaluing this important point, you are not a good investor in the very end, because if you just invest in good technology, it does not work.
Yeah.
You need to also have the right team to change systems by selling their technology and implementing their technology. So the people aspect is much more important than just, or it's even is as important as the technology as such.
Yeah, well, you're preaching to the converted there, Jan, as you well know. But absolutely, you can have all the capital and all the technology in the world, but if you don't have the right team to implement, it's not going to get very far. So yeah, no, it's good to recognize that. It's been great to talk. We've obviously covered quite a lot of ground. I'm just going to close a little bit. We've touched on some of these things, but just maybe a little bit of a look into your crystal ball, as how maybe you see the rest of 2025 playing out. What are the things that are going to interest you? What are you hoping for and looking to see in the rest of the year?
Yeah. So we are on our way to do a couple of more investments, and we would like to close the end of the year with 8 investments into our new funds. We in the next few days we will announce the next investment.
Okay.
Can't name it here. We have 3 processes in term sheet stage, so we are quite on track. And that's one strong expectation here, that we move forward. And topics, I think the intersection between energy and energy transition and artificial intelligence is a quite important topic. No, we
Yeah.
invest since 2016 in teams which use artificial intelligence technologies, but just a matter of fact that artificial intelligence has developed that fast in the recent years.
Yeah.
There are much more powerful applications right now. Just think about using artificial intelligence to running in parallel thousands of scenarios, how the energy markets develop,
Yeah.
and what would be the right decision in optimizing to a position, algo trading based on AI, and all these topics we need in future to embrace our energy system, which is then fully decentral. So artificial intelligence plays, which already have now in the energy transition, is a clear focus on our end. Then we see also a couple of opportunities. I mean, in the EV space, I think we had a hard year last year. It
Yeah.
was not scaling than we would like it to be. I was in particular happy to see the announcement of Volkswagen that they sold the double size of cars this first quarter than last quarter in electrical vehicles. So we really believe the market will grow further. There's a strong support right now in Europe, and we will see here further quite exciting or important time technology topics like topics like fleet charging systems for buses, or for trucks. That will be the next big thing. That's not only that makes also economical a lot of sense, especially in Europe, also with new regulations coming in. Then that would be things we still believe the heating will need more digital tools and technologies in
Yeah.
order to make it right. That will be the topics we are looking right now into.
Perfect. Well, thanks very much for sharing it and for sharing your thoughts this morning, Jan. We'll look forward to meeting and engaging in the coming weeks. But thanks for giving us your view on how things stand. And again, clearly a positive message that the headwinds are there, but the tailwinds are stronger still. And that, yeah, hopefully Europe can ride this challenging period and come out stronger than we went into it.
Yeah. Thank you, David. Thanks for having me. It was great.